Good day, everyone. My name is David Williams, Executive Director of the International Association for Energy Economics. It gives me great pleasure to welcome you to today's webinar entitled COVID-19, Scenarios and Impact on the Global Energy Markets. We are grateful to Jarand Rystad from Rystad Energy for today's timely discussion. First, a little bit about the International Association for Energy Economics. We are the largest association specializing in the field of energy economics and provide a forum for the exchange of ideas, experience, and issues among professionals interested in the field. The organization produces 2 professional journals, a newsletter, and holds conferences and virtual presentations, along with a host of other products and services that you can find on our website at www.iaee.org. If you're not already a member of the association, we welcome you to join. A few housekeeping matters in regard to today's webinar before I hand things over to our moderator. First, this webinar is being recorded for those that cannot participate in today's live event. If you have any questions, please click the Q&A button at the bottom of the Zoom window and type your questions. We kindly request that you do not send these by email. We've allocated sufficient time throughout the webinar to answer your questions. And now I would like to introduce you to Jarand Rystad, founder and CEO of Rystad Energy. Jarand, over to you.
Thank you. Thank you. So hopefully you can all see my slide also now, the front page here. Yes, again, thank you for this invitation. It's an honor for me to present for all of you. First, you might wonder why should we, as an energy knowledge house, engage in a medical topic like COVID-19? It should be enough experts within epidemics and pandemics, that should cover these topics. So why are we doing it? And I think basically it's 3 reasons. First, this pandemic has totally changed the global energy landscape. So we cannot say anything meaningful now about the global energy landscape without really relating to this ongoing pandemic. And then we realized that quite early, late February, of course. But then we realized, and let's go to the best source globally that could help us to see exactly what will happen country by country. And of course, we couldn't find that. It was no authority that had forecasts for how long this pandemic would last or what the impact would be on a societal level. So basically, we understood that we had to do the work ourselves. And then when we dived into this, of course, we found out that very much of this methodology we are using when we are simulating the global energy markets, the global oil market, for example, it's the same kind of methodology, looking into regions, looking into effects and delays, and then what will be the future effect of a current action. So this is not too different from the way that we are simulating the oil market, the way that we can simulate the COVID-19 virus. So basically, we have applied our mathematical models, and since this is now a very global pandemic, I think it's 212 countries. It's a lot of data to relate to. It's a data on fatalities, hospital cases, ICU use, and of course reported cases. But there's also a lot of uncertainty, a lot of kind of scientific approaches that you need to massage all these figures to get something meaningful out of it. And this is basically our profession, to do this kind of data gathering, data washing, and taking out some context and insights based on this. So we have done that, and we will share the results with you today. But also, a third reason is that we also have a global network. We have 20 offices globally, so we can get first-hand information from whether it's China or Japan or Sydney or South America or the Americas. We have offices all these places, so we can use our scouts to gather information that will be relevant. So basically today, as you see from this content page, I've split it up in 3 main chapters. First, we will actually talk about the pandemic. And
Jarand,
yes, sorry.
Just real quick, would you mind sharing your screen so we could see the slides?
Okay, so I thought it was already shared. So far, it was only the. So I will do that one more time. Share screen. So you haven't missed anything because I've only been talking so far. So only to the first slide. So basically, can you see my screen now?
We see it now. Thank you.
Yes, sorry, that was the first page, and this is the second page, so you haven't missed anything. So yes, so as you see here, we have this basically 3 chapters, and I will stop after each chapter to allow for some questions related to that. So then Artem, my colleague and partner in the Rystad Energy and a specialist on the shale, he will help me to read the questions and feed the questions over to me orally. Also, he might answer some of the questions if there's some details on shale or whatever that I'm not able. So he will support me a little bit on that. So please feel free to type in questions, and I will stop after each of these chapters. Okay, so then let's again look into. So as I said, first I will talk about the virus, the pandemic, how long time I think we have to deal with this. I will share some new insights that we have just developed on this now also. So this will be the kind of the first time we are sharing some of these insights. Then I will look at the consequences for the oil market. And then again, some thinking around the energy transition and what the consequences will be for the energy transition and the green shift in light of this virus. Okay, so let me now start with a conceptual slide showing how to think about the virus. And the first thing to think about is, why do we care so much in a way? Why don't we just let the virus come? Look at it as a kind of regular winter flu. Yes, some people will die, but that happens every year. Let's get done with it. Let's not get this to kind of influence the global economy too much. This could be one approach. And that's what we have illustrated here with this red curve. In that case, it will double every 3rd to 4th day, which means 100-folding in 1 month, which means that after 2 months, you have million-folded. Now you have 10,000-folded, which is basically enough to infect the complete population in most countries. And in that case, typically with the COVID virus, you need about 0.3, 0.4% of the people that are infected will need intensive care, and they will need it for 10 to 15 days. And in that case, we will fill up for the population of 100,000, we will fill up then 300-400 intensive care beds. And the capacity in most countries is between 10 and 30. So basically the situation would then be that we would have 90 to 95% of the patients that need intensive care will not get that because it will be no capacity. And many of these people will then die that didn't need to die if they had sufficient quality of the care. So basically that would be a very cynical approach, and that's why all the governments want to start to limit the spread and the speed of the spread of the virus to keep it controlled, in the sense that at least you can keep that you can have capacity to treat the people that will need intensive care. So I will soon come back to what that means for practical purposes. So that's why people start to suppress the virus. And then maybe the ideal situation is to do like this curve, green curve is indicating, that you will be efficient in suppressing the virus, get rid of it, and then you can go on as normal within your own country. This is maybe what we have seen happened in South Korea or in New Zealand and a few other places. So basically now they're just trying to get rid of the last few cases. However, then you have been building up now herd immunity. So if you get the new cases in, you could have a second, third, or fourth wave of infection. So it's not a very stable situation. So that's why also some countries realize that they might have to fight with the virus for a long term and gradually build up herd immunity, which is then the middle case here that we call the mitigation case. So I think this is the approach also that implicitly many governments are following, because it's too late, not realistic to really suppress the virus like they successfully have done in New Zealand. Not all places can do that. And by the way, if you have the suppression strategy, of course you need to keep your country in total isolation. But of course, then what you do is that you hope for the vaccination to come, and then you can have enough time in a way in a suppressed state. You have to stay in that state until you get the vaccination. And maybe some indications is that this could come within 12 months, maybe 18 months. So, but at least then this isolation will last for that long. Then let's look at this, the actual use of intensive care that we have seen so far. We have figures from Italy, from France, from Spain, from a lot of other countries. And we see that the peak in Spain, Italy, and France, on average, on a national level, has been between 5 and 15. However, this was not equally distributed in the countries. So some part of the countries, they had twice or triple this, and it didn't have the capacity. So all of these countries have been fighting a very hard fight with or slightly above the capacity of intensive care. In New York, it's been actually 2 to 3 times higher than this. Also, US has higher capacity, and we don't have all the information about what has really happened in New York in terms of capacity, but clearly this has been a very tough situation many places in New York, probably exceeding the intensive care that has been. It's not only the equipment, of course, it's the competence to treat all these people also that is very important. So that is why intensive care is what is dimensioning the virus. And just to not take all the mathematical reasoning here, but just to jump to the conclusion, as you see here on the right-hand side, we indicate that if you have 25 beds per 100,000, you can be done with the virus in a fairly responsible manner, building up herd immunity within 6 months. If you have 10 beds, it will take you 12 months, and if you have 5 beds, it will take you 22 months. So still, it's a long term to wait. It's not done in a few weeks or a few months. So I will soon look at what is actually the status. And then to understand this, it's not enough to look at the reported cases. The reported cases is only the tip of the iceberg. And when we are modeling the virus, we are trying now to describe the actual number of cases, the true number of cases in the population, and not only the reported cases. And according to different scientific papers, between 40 and 60% of the population that is actually infected is asymptomatic. So they don't know even that they have the disease, but you see that from some screening studies, and you have seen that from other sources that is the case. But of course, around 1% get really very serious sick, as I said, and a share of those, again, will need the intensive care units. And the fatality rate is very age-dependent. So we have, in the report last week, we shared a new view on that, and actually the global fatality rate was 0.38. That is based on the global population. If you apply exactly the same fatality rate, for example, for the population in Italy, it will be 0.97. If you apply it for Norway, it will be 0.7. So it depends on how old the population is. And the oldest population in the world is Japan, and then the fatality rate is actually 1.1%. Okay, so but what we are using is this fatality rate per country, adjusted for the demographics. Also, it's higher for men than for women. And we know also from scientific research on this that it's 18 days on average from being infected until fatality happens. So basically the number of fatalities today will tell you how many people were actually infected 18 days ago. And as you see from this picture, today, the 28th of April, we have 215,000 fatalities globally. For that population, which is primarily Europe and America, it is an average infection fatality rate of 0.65%, meaning that you can multiply this number with 150, go 18 days back, and meaning that the 10th of April, we know for certain that it was approximately 33 million people infected. And since then, the growth has been approximately 3.6% per day. We see that from different numbers and also from behavior. And then we know that today, based on these numbers, we have a total number of infected people that would be 55 million. However, as I said, fatalities is a very hard numbers, but still, can you believe in them? And I think here, from many sources, for example, New York Times, we have seen that the reported COVID fatalities is not the full story. It's actually many more people dying in many places, more than normal. That is very likely to be COVID. So if you adjust for that, you actually have to increase the number of fatalities with 60%. Then we actually have 345,000 fatalities as we speak, 53 million true infected the 10th of April, and 55, meaning that we have some 88 million people actually infected today, which is still only slightly above 1% of the global population. However, if we then look into some of these, here you see these numbers. If you look into some of these cases that the New York Times has studied in detail, you will see here that here we have looked at how many people normally die of 100,000 people in every day. And if you have a population with quite old people, like you have in Europe, is around 2.5 people. If you have a very young population, like in Indonesia, it's 1 person. So that depends on the demographic pyramid. And based on a combination of the figures from New York Times and the research we are doing on this, you can now see how many people is actually dying, is dying every day in these different geographies. And in New York, we have a number that is 4 times higher than the normal figure of 1.8 person dying every day of 100,000. And about 75% of this is currently explained by the COVID. So the light blue in the middle is the COVID reported death. But you see that for quite some countries, especially the Ecuador and Jakarta, it's it's almost between 60 and 100% more dead people than normally, but still they are not explained as COVID-19. So this is very likely still that is the case. So you see that the light blue on the end is basically the underreporting of actually fatalities. And we have to look at this also to get meaningful numbers for true infected people. And I will then jump to the next slide. Here, using this number, we get the resulting people that are already infected. And then we see that in countries like Belgium, Netherlands, England and Wales, Spain, it's about 10 to 13% that is likely already infected. This has been after 8 weeks of a very hard fight with the virus. So, and we probably need to have a similar situation for between, to reach between 50 and 70%, meaning that, and since it's now declining, and since it's likely to decline, it will probably take longer. So this means that even for these most extreme countries, it will take between another 6 to 12 months to reach herd immunity. Only in New York City and in Ecuador, we think we are already above 40% of the population actually being infected. And then they're actually approaching herd immunity within a few months for these two places globally. If you then take a more global look, actually still we are only in the beginning of this. And of course, since this is a global pandemic, you cannot open international travel before most of the countries has reached herd immunity. And even for Northern Europe, 5%, Southern Europe, 4%, as you see. So they, after 8 very tough weeks, so they have to do this another 10 times, then 80 weeks, then we might achieve closer to 50%. So this means, actually my conclusion here is that with the current speed, will take a long time to reach herd immunity globally, probably 2 years. And I think based on some of the news on the vaccination side, it's likely that the vaccination will come before you have reached herd immunity. And then it's about, then still you have to have a global lockdown that is, that you still keep the countries quite isolated. So meaning that I don't see a case where we can open international travel, where we can gather together in big groups for the next 1 to 1.5 years. But we have, and that is after the vaccination has arrived, and still very uncertain whether that will be kind of whether that will qualify, of course, but there are some good news that you might have seen recently. So I think that there's no other reason to believe that we will be done with the virus, except from maybe New York City is the place where this is happening. But New York has been a very special case with a high level of pain, of course. So other places is not in that situation, and they don't want to get into this situation, so they will suppress the virus going forward. But we have seen that all countries have successfully, I mean, all these measures to provide social distance has worked. As you see here, they have gone from growing doubling between 2 and 4 days, and now most of them are between 3 and 4% growth, which means that you double only in 18 days or more, as long as we keep the social distance that we are doing currently. So, and my prediction is that we will have these waves going a little bit up and down. Now we are loosening up, but I think we will get that some comeback on the infection, and then we have to make more strict measures again, maybe in June or May, June, etc., in the different European countries that are now loosening up. You see that some of the other countries that have been later into the infection are still having a quite steep growth still, like Russia, India, Bangladesh, Mexico, countries with high population. So we have probably not seen the worst from these countries. Also they are starting to kind of see a slower slope. So this is basically what I wanted to say about what we so far can observe about the disease, meaning that we have to continue to see very strict global travel restrictions because we have to keep the different countries in isolation to avoid reinfection after the first declines that we have seen. And also, international air traffic is probably not going to come back in the long term, but road traffic is probably going to come back in a not too far future. So, and that is what I will go into now. But before that, maybe you have got some questions, Artem. So I will wait a little bit now to see if there's something I should comment on.
Yes, thank you, Jarand. I think it was a very interesting overview, and it's not the first time I hear that, but I have to say it's always very interesting to hear some of these latest thoughts. There were quite a few questions. I think you will cover some of them very much in detail in the second part of this presentation, but a few of them, maybe you could answer them right now. So first of all, in your view, how COVID-19 compares to the Spanish flu from 1918? What are some of the similarities and the main differences?
Yeah, it's of course that is the last time we really had a global pandemics. So some people claim maybe every fourth generation is really experiencing a pandemic. So if you live for 4 generations, you will have it once a life, one every 100 years. But that pandemic grew very much in the first winter of 1918. It was actually almost going down quite much in the summer. So it probably had some heat component. You know, maybe it's the case also here, but we cannot really. First, we had a hypothesis that since the droplets are bigger in the summer, it's spreading much faster in dry and cold air, then the virus is going to spread much slower in the summer, and it will start to spread more fast again in the winter. And that was really what really happened with the Spanish flu. So it was very much down in August 2018, and then it came back big time in 2019, in November, December. In 1918. However, I think it was different from the COVID because it was primarily affecting fairly young adults, not so much children and not so much elderly people. So this is at least one difference. But I think you all maybe have as much knowledge about this as me. So please, yeah, you can go on.
Yes, and one more question, maybe you could, the one you can pick now. Do you think there is much relationship between air pollution and COVID-19 propagation, or not at all?
Yeah, I think honestly, I'm also not kind of competent really to answer this question. I've just observed that people with long with weaknesses in the respiratory system are more also likely to have a more serious kind of experience with the virus, whether it's smoking or air pollution that I've also heard. So I just, yes, I've heard the same rumors. I don't have any kind of independent research done on that. Of course, that could be done. If you have all the data on air pollution, you could do some statistical analysis here. We haven't done that, honestly. Okay.
Okay, so I think then probably you could move to the second part.
I will move on then. So
on the second part.
Yeah. So then we'll stop also after the second part. So as I said, probably it's the aviation that will be the longest, maybe even a structural change in global aviation after this. Just now to observe what is actually happening. We are now tracking on a daily basis all the flights globally. So it's about 110,000 flights globally, I think. It used to be before this situation. And if you look at countries like Singapore, Hong Kong, Spain, UK, Germany, France, and France at least, all of these countries has actually a reduction of more than 90% in the number of flights compared to last year. You know, it's a seasonal effects of flights. It's actually less, most flights in the summer, less in the winter. So we see another interesting thing here is that actually China was down and these are the number of weeks after you had the case number 500 in each country. And 5 weeks after this in China, the flights were down. That was the kind of the peak of the infection, expected to be the peak of the infection. The flights were down 70% in China. Now they're actually back up at 42%. And we see that India is now at 50% and US at minus 60% and Japan as minus 44%. So still the consumption of jet fuel globally is driven by the four of the biggest economies globally, actually China, US, India, and Japan. But for countries like Europe that I've commented on and many others, flights are really almost gone, 5 to 10% on normal flying. So clearly we will see the impact on jet fuel soon. Then we have car traffic. And also, where do we get this data from? It's actually 4 different sources. It's a robot that we are taking Google traffic data, the traffic layer for every city globally. We are looking at some published data from mobility from Apple and Google, and also a data source called TomTom. But the broadest one is this Google traffic layers, and then we can follow what is happening on the traffic side globally. So we have divided this into Africa, Americas, Asia and Australia, and Europe and Middle East. And overall, the picture is that every single country globally is affected by the virus, and the traffic is significantly down, on average 45 to 50%. The other message is that the peak was actually the bottom was actually 2 weeks ago. And since then, we have seen a slight improvement. So these are data from last week and the week before. We're just now in the process of updating all the weekly data, but that was not ready by just before this meeting started. So we see that, for example, in Africa, it's almost many countries are 60% down in traffic, and almost all are more than 30% down. We see also for Americas, and we see that the week before last week was further down in traffic. So the traffic was on its way back. Also the same, we see that on average, Asia was approximately the same. It's probably on the bottom still, especially South Asia with Bangladesh, Sri Lanka and India has been very much down. And also all the European countries, as you see, and the Middle East is typically between 30 and 60%, on average 40, so 40%, I think, down in traffic. So clearly this is affecting the global traffic, the traffic levels in each of the cities, because people have a home office and they are not traveling. Even if the first effect we saw was that actually traffic was increasing, like in London, because people wanted to avoid public transportation and rather took the car. But this was when they still went to work, but now it's home office almost every place. Also, if you look at this state by state in the United States, we see the same patterns, especially the East Coast is affected, and especially then New York, New Jersey, which has been about 60% traffic reduction on average in April. Only the Midwest, with some states like Oklahoma, Kansas, Nebraska, Iowa, has seen, we don't see really that the traffic levels the traffic level is affected. But we see that, as you see, all over America except from some parts of the Midwest. So what does this mean in terms of fuel consumption? And first of all, jet fuel. Let's look at jet fuel. And jet fuel has been growing steadily over the last years, about 10% per year. So we are flying more and more globally. So we expected now a consumption of 7 million barrels per day of jet fuel. However, most likely the real consumption will be 2.5 million barrels per day, meaning that we will lose about 4.5 million barrels a day for the rest of the year. Here we also indicate two scenarios. One is that we will have kind of some kind of medical or technological solution that will make us confident that we can avoid the virus from spreading, and that we will get more or less back to normal by the end of the year. This is a quite optimistic scenario, and this is the top line here. Also, we have what we call the mitigation scenario, where we think that countries have to fight more with the virus constantly, and also there will be more concern, and we will see less flights, and then, as you see, we will only get back to like 4 million barrels by the end of the year. If we then look at not only aviation, but in the interest of time, I jump now directly to the global demand for all kind of fuel. We see actually that April is probably going to be the floor with 28 million barrels of lost demand. And of course, demand, this is unprecedented globally. Usually the oil market is moved by the last 1 million barrel. And here we have 28 million barrels. So it's much more than we have ever seen before. But what we see now is that the car traffic is coming back. So that's why we expect the short or the demand destruction to be smaller in May, as you see, maybe back to 80 million barrels per day. And again, we have these two different scenarios, where one of these, the mitigation scenario, is also showing it also will see a shortfall of demand or destruction of demand that will also be between 5 and 10 million barrels for the entire 2021. If you look at US in isolation, we see similar shape of the curve. US is the biggest consumer of car fuel together with China, but and we see actually in total that both road fuel and jet fuel and some other fuels will be a demand destruction of about 6 million barrels in May, down to 4.5 million barrels reduction, in April, down to 4.5 in May. Also, so this is the direct impact. And since the purpose of fighting the COVID-19 virus is to stop people from moving around, and the purpose of oil is to get people moving around, it's clearly that oil is directly affected with jet fuel and light-duty vehicles. But also the other segments like truck transportation of goods, and all kind of industrial applications and petrochemicals is also affected by the global economy. And the global economy is clearly also going down due to the situation we have. So maybe, as you see here, between that is actually going, instead of growing by 3 or 4% globally, it could decline by 4 to 5 or 6% globally. And then this will again impact all the different supply segments. So with that, we have then a global destruction that I just indicated for you two slides ago. So what will happen now with this pile of excess oil that we have? And we saw what happened last week in America, where we actually got, for a very small part of the volumes, by the way, negative prices, because basically people had to pay to get rid of the oil, because the alternative was even worse. Maybe you had the oil on some trains or whatever that had a very high fee, so then you just had to get rid of it in one way or another. And then how long will this last? What will happen with the global market? And here we have a little bit complicated slide that I will try to explain a little bit illustrate what could happen. And we have looked at all the storage that exists and looked at the peak storage level historically, and concluded that approximately about 800 million barrels was theoretically accessible storage in the 1st of April. But looking at practical storage, we think it was less, maybe around 500 million barrels. Because, you know, some of the old storage tanks, maybe they are not sufficiently prepared. Maybe you haven't done the X-ray examination of the structures to look at structural integrity, or other kind of practical, you know, the pump upgrades or whatever. You know, it's not that you can just start the storage as this. It takes some time to prepare old storage for to be used. So with that, we think that global storage will easily fill up. It will at least last for 25 days, but it could last for 55, 60 days. But then if companies are continuing to produce, of course, you will just hit the wall. There will be no more storage. And basically, this is the only way then to stop companies from delivering oil is basically to bring the oil price down to zero or even into the negatives. So this is the fist in the face in a way that the oil executives need to understand that basically you must do something you have never done before. You have to shut in your wells because there's no takers of the oil that you have. But of course, this is a prisoner's dilemma, game theory situation, that you would rather, like the others, to stop producing, bring back the oil prices a little bit, and you can continue to deliver your own. And also, of course, OPEC has engaged into this. And then, of course, it's a discussion what will happen. Should the market work on its own, or could you, or should the government, including Texas Railroad Commission, the Russian government, the Saudi Arabian government, etc., intervene and basically determine what kind of cuts you should have? And I think, honestly, that in one way, the oil companies will be very capable of doing this, because as I soon will have some arguments that the oil price is likely to go back to very high levels in 2022. I'll give you the reason soon. Then you actually have a business case to, instead of selling your oil for $10 or $15 today, or maybe zero for some of it, you could sell it for $100 in 1.5 years. And if you know that, then, and if you have compressible cost, and you have subsurface conditions that will allow you to shut in and then reopen, so that you will maintain pressure, etc., then you have a business case to close down. And that will be something you do if the market was working on its own. If you have a lot of interventions from the governments, maybe you start to get tactical to try to get your volumes into the market, even if your neighbor might not get their volumes into the market. So that's changing the psychology a little bit. So that's, of course, a discussion how constructive then a governmental intervention will be into the market. Still, I think that is what is going to happen. I think the politicians want to have a say in this and are taking some initiatives. But I think that we will see this unprecedented situation within a few weeks, that we will hit a wall, that we will see nowhere to store the oil. We already see that the product storage is full many places. We see that, for example, jet fuel is filled up many places, is no demand for it. It's limited storage time, it's limited actually, it cannot be stored for too long time because then the quality will go down. So we actually see some jet fuel is brought back to the refineries and refined to other products, for example. So this is just one example. So this is the short-term situation. And then I said I will give you some arguments why I think that this oil market could turn in 2 years. Because now we have to shut in fields. And clearly when we're shutting in fields, you don't want to drill a lot of additional wells. You only want to drill wells if there's no way to get out of the obligation with a rig company. For onshore, you can get out quite quickly, short contracts. And also offshore in general, it's much shorter contracts today than it was a few years back. But still, if you look at some of the rig companies, still they have utilization for approximately 50% of their rigs in the early 2021. But we also saw from the last downturn that it's possible to negotiate with some of these drillers, or basically say that, sorry, we will not take your rig, and we will, by the way, cancel everything else if you don't comply in a way. So of course, this is a game between the rig owners and the oil companies. But bottom line is that we will see a much reduced drilling in existing fields. So reduction of infill drilling, which will take down the future production potential. And just to give you a few other arguments, now you actually looked at, this is the shale well production of liquids in the United States, split by vintage. So you see these are the different vintages, which is I think 2011, 12, 13, 14, 15 and 16. Due to the oil price crash in 15 and 16, much smaller vintages. Then 17, 18 and 19, and then 20 and 21. And this is assuming that every month going forward will be at the same level as 70% of what we have seen in April this year. But when the oil price returns, we are assuming then that 2022 will be like 2019. So this is just the same numbers. Of course, it looks different because it's added to another slope. So we see that, of course, here we will lose 2.5 or 3 million barrels of oil, and versus what was expected, maybe 4 or 5 million barrels of oil. But this is for shale. But we can look at the same for all the other segments globally. And we have quite much now well by well, month by month data. This is showing this for Norway, well vintages. And also here, just one observation is that half of the production comes from fields that are less than, that wells that are less than 5 years old. An average well decline on the portfolio of previous well vintages is 19%, including interventions. If you take away interventions, it's actually minus 25%. But with interventions, it's minus 19%. So meaning that if you drop half of the drilling globally from 100 million barrel, you will lose 10 million barrels approximately per year. Of course, some of these are driven by gas wells and some are driven by some other fuels, etc. This just illustrates still my point that if we have very low drilling levels, if we get done with the virus, in sometimes during 2021, if people start to drive more again, start to do some international flights, oil consumption will start to increase, maybe from a level at around 92, 94, something like that. And then soon, oil companies will struggle to deliver enough oil, even if you have a lot of stock and inventories that you can draw on. This will then increase the risk for a price fly-up, seen from the consumer side, or the opportunity then for oil companies, that you could see strong prices in 2022, since you haven't really been investing in new capacity in the years 2020 and 2021. So this is, of course, short or medium term, a positive opportunity for oil companies. However, for the long term consumption of oil, this might actually influence the green shift. And that is briefly what I will talk about in the next chapter. But before that, I will see if you have got some questions for me, Artem. So I'm happy to comment on those now.
Yes, thank you, Jarand. There are quite many questions around the US shale, and I think just for the sake of time, maybe you could continue with the third part, and I will actually type the answers to those questions, because there are also quite many people interested in COVID-19 impacts on energy transition and the climate change. So maybe you could actually.
Okay. So maybe you can help me to answer some of these questions directly then afterwards. And I just have a few slides now on the energy transition. Of course, this was the big topic globally until February 2020. We had a paradigm shift, I think, during 2019, that all companies globally changed mindset from the energy transition is something that will happen, but sometimes far down into the future, and we don't need to think about it currently. But after 2019, the thought was, this is actually starting already. We have to change our strategy today. We have to do different actions. And people shut in a lot of frontier exploration. They started to sell off high emission assets, etc. You know, so really the major oil companies, at least, but also many other players, started to prepare for the energy transition in February or until February this year. And then suddenly, over the last 6-8 weeks, the focus has been completely different, as you know. So what has happened so far? Just a few examples globally. But I think I'll take the main message first. My main message on this green shift is that the COVID-19 situation is short-term slowing down the green shift, but long-term probably making it come even before. So short-term it's slowing down because basically everything is slowing down. It's uncertainty, and then people in situations with uncertainty, people choose to delay things. Delay things like illustrated here. It's many auction rounds that was announced to be done in 2020 for solar and wind projects. Very many of these are postponed. Also, we see a lot of delays in current projects in terms of execution of the project because they cannot get access to people or equipment. We also see that since many of the price of the capital items that you're buying for renewable projects are priced in dollars, the dollar is very strong, and your profitability is going down for many places globally. So you have a business case to actually do many of the solar and wind projects, etc. So there's many things that is actually slowing down renewable investments in 2020, and I believe also in 2021. The reason why I still believe that it will strengthen the green shift long term is that when we are going back to 2020 or going into 2022 and 2023, as I've described, we might see very high oil prices. And then EVs, electric vehicles, will be very competitive versus gasoline cars. Off-grid solar plants will be very competitive versus diesel-based electricity generation, for example. That is still the case for many industrial applications. There's many other examples how then renewables will actually be very competitive. And also I think the mindset shift also for international aviation, etc., that we are seeing now is going to at least weaken the demand for some of this, for some fossil fuel. So in sum, I think that this might strengthen or bring peak oil even further into the nearer, and maybe we have already seen peak oil demand. So, but before I comment on this is our latest, or the research we did before the COVID-19, adding up all the different segments in oil consumption and concluding that oil demand is likely to peak typically or around 2028 at 107 million barrels. This is based on the penetration of EVs, especially for the passenger vehicles, but also other considerations on both petrochemicals, road freight, aviation, maritime, etc., for all these different segments. Just now, and to give you a very rough hand-drawn line, maybe consumption will rather be something like this. So I will not keep it on too long again, because it's just a sketch. But since we are going down to the lower 90s, since we will struggle to increase the production very much in 2022 and 2023, it's not completely unlikely that peak oil demand is actually behind us. So maybe I can let that be kind of my concluding statement before maybe if you have some questions in the end now. But of course I see also clearly other scenarios, but also this is a scenario that I would never believe in more than 8 weeks ago. But with the current situation, I think that this is at least not completely unlikely. So I think with that, I like to open up for some questions on this topic, also on the energy transition.
Thank you. Yes, so maybe we could still cover a couple of questions from this list. So it's not directly related to the energy transition.
It's okay, whatever.
But you talked a little bit about potential lack of oil supply in medium term and another upcycle. But more precisely, someone is wondering how likely it is that we'll see $150 oil price already in 2022, and what needs to happen in order to see that.
Yeah, I think 150. I think it's maybe whether it's 100 or 150, but at least it will be a shortage of oil, and people are willing to pay quite much because they cannot change the structural need, over the night. So if they have a truck that is based on diesel, they have to continue to run that truck on diesel, and still you have a business case to run it even if the oil price is $150. So that's why basically it's inertia in the current demand, that is lack of price elasticity. But it will. So we see that typically that with a 1 million barrel in imbalance, oil price change 5% per month, meaning that if you have that for 6 months, it will go up about 30%. And if you have that for 1 year, it will go up about, or 18 months, it will actually go up more than double, or triple, it can even triple. So this is based on the dynamics that we have seen historically, and this might well happen again if we get shortage of oil. So it's just this.
Yeah. And one more question around oil demand, more long-term perspectives. Besides economical growth, are there any other factors or structural shifts which might increase oil demand in long term, as opposed to move it the other way around?
Yeah. I think you could speculate, for example, that less interest in public transportation due to that we are maybe developing more a kind of sensitivity to avoid crowds, at least before we are controlling the COVID-19 virus, could increase actually traffic, car traffic, individual transportation rather than public transportation. That is a big topic in all other places than the United States. In the United States, it's only a few cities where you really have public transportation is important. But we saw that as a tendency both in UK, but also many other countries, actually a slight increase in private vehicles before you actually had a decline. So this is at least one speculation of where we can see increased demand. So let me stop there.
Yeah. Okay, thank you. I think we still have around 10 questions, and I think we'll be happy to follow up on them all after the webinar.
Yeah.
But now, for the sake of time, I think I would like to pass it back to Dave so he can say.
Yes, I think we have to do that. So thank you for this opportunity, and yes, word is back to you, please. Yeah.
Oh, thank you. Thank you very much. IAEE wishes to thank Jarand Rystad from Rystad Energy for really an outstanding webinar. I know I personally learned quite a bit, and we're very, very grateful. For everyone listening, this webinar will be available on IAEE's website for future download. If you're not already a member of IAEE, we encourage you to join by visiting www.iaee.org. Thank you once again for listening, and I officially close this webinar.